Oh boy, happy Monday, everyone. The stock market is, it's mighty green, especially after a very awesome and amazing 4th of July weekend. Hopefully, everyone had a great 4th, and you are very excited for a lot of FOMO that is very much showing in the market right now. So, why is pretty much risk on assets such as interest rate sensitive stocks, such as SoFi, AMD, semis areas, but there's other things to talk about there. But interest rates do actually really affect all the market in general, along with the semis. Robinhood, very interest rate, because obviously if there's a lot of interest rate hikes, then people are probably not going to be taking that much risk in the market, which means Robinhood is going to go down. Software is getting a gigantic push higher today. Palantir is up so far 3.27%. It is 11:53 a.m. Eastern Standard Time. ServiceNow, good boost. Meta's a little good boost. PayPal. Oh man, PayPal is just PayPal here. Coinbase is up a little bit. Ethereum is staggering a little bit, but where I bought Ethereum a little over a week and a half ago now, it's doing pretty good. So in today's video, we're going to be talking about key things revolving around SoFi, revolving around the broader market. This is kind of pretty much a hybrid video. Why the market is very much green right now. Oil is really not spiking, or I should say crashing downward. But oil is definitely below 70 bucks, and that's extremely bullish. Anything below 85 and especially below 80 is even just bullish in general. 85 or below on oil, the Federal Reserve has stated that it's not really going to be inflationary. So remember that, especially if you're looking at oil as an indicator. Anthony Noto, SoFi CEO, has stated that if oil gets below 80, SoFi is going to be getting a reevaluation rating, which means the stock is going to go from trading at 2 times tangible book value to 3 times, which is right around 21 bucks-ish. Maybe even higher. It doesn't have to be perfect. It could be like 3.1, 3.2. But ultimately, SoFi, it's on its way back to 20, 21, and then soon 25, and then soon ultimately back to all-time highs. Very much busting through all-time highs as well, too. So I kind of really want to talk about some things around SoFi. Economical data, why this very much green Monday is pretty much happening. Want to go over my public profile that I'm doing for this YouTube channel. And let's go ahead and start right now. I just got to get some water. Cheers. If you are new to this YouTube channel, I put out videos Monday through Friday, sometimes Saturday for bonus educational content. Water. Cheers. I'm retail. I'm not big money. I'm not Wall Street. I'm not an analyst. I'm just your average Joe in the market here that has been around for a while now, 6+ years. And I have seen some craziness, and I've taken advantage of a lot of craziness. And it's always worked out in my favor. Knock on some wood here. And I've been buying a lot of stock in the last 7-8 months now, and it's really starting to pay off, because the last 4, 3, even 2 months has really been very scary, especially for newer investors, traders. And if you don't know how this game is played, you could very well get shooken out of great investments, great returns, and ultimately just have evil forces just take your profits. And that's really what it comes down to. Stock market is a very dangerous game, so you gotta be aware of all the tricks. And the tricks are basically that it's going to be a point in time where this is going to be the great downfall. Every single time the market always goes down, or I should say a very geopolitical event happens, this is going to be the time that the market's going to die. This is going to be the time that the market's going to go away. This is going to be the time that the market is going to disappear. I bet if you ask that question to Warren Buffett over his decades of investing, he would probably say that he heard that more than probably well over 100 times. And the stock market's, it's a rigged game. It just keeps going up and up and up. Now today, what is basically pretty much happening? Typically I do these videos a little earlier in the morning, but I really wanted to kind of just watch the market here and really see about this rally. So last week we had a very short weekend, or I should say long weekend, short trading week. It was only 4 days. We had off on Friday. But last Thursday, we got a jobs report, which I did make a video on. And basically, this jobs report kind of really shook off a lot of people the wrong way, because a lot of this data gets very much re-advised. But employment report is cut in half from pretty much expectations in the previous month. Meaning that, well, sure, you have unemployment rate going down, but the actual people being employed, it's not doing so good. So what this basically is telling the market is that if you think there's going to be rate hikes, you are high. Very, very high. And the remarkable thing about this is that right now, the betting markets and the algos still has us at such a like this is a utterly terrible percentage chance for a rate hike that is coming on 23 days. We are away from the next Fed governor meeting. SoFi is going to be dropping earnings that morning too, July 29th. So definitely stay tuned for that. If you watch my videos from about 8 months ago, actually 7 months ago, back in December, there was a 20-something chance that Powell would cut rates in December, and it ended up happening, okay? He ended up cutting rates in December by a quarter basis point, but there was only like a 20% chance. This stuff is all based on algos. If you're new to the market, you're going to have to accept the way the market really is. It's ran by bots. It's ran by algos. When I started learning all this, I honestly thought that people were like messing with me and stuff. I'm like, how can the US stock market, the greatest stock market of all time, be ran on automation? Well, it really is. So I don't really know why the automation is so just driven on rate hikes. And the only explanation that I can really go ahead and say, and yeah, as you get farther into the year, you just see rate hikes. You see rate hikes. This is just utterly like pathetic. Utterly pathetic. But this can go ahead and change. Everything can change by a snap of the fingers. Now, the Fed governor has not given us any forward guidance. I believe that politics are really in play here. And I really do feel that the forward guidance is being left out on purpose. The forward guidance could very well be, hey, we're not going to be raising rates anytime soon. Why do I think the new Fed governor isn't giving us forward guidance? Is because, one, he has stated verbally that he wants the Federal Reserve to be out of the spotlight that it's been in for the last several years, let alone the last decade. And they want to truly become a independent system, like they used to be. If you look back in history, the Federal Reserve is not supposed to be anywhere on the betting market. People place bets now that the Federal Reserve is going to do something. That's not what the Federal Reserve is supposed to be there for. The Federal Reserve is supposed to look at inflation and be like, hey, let's raise rates, lower rates. Believe it or not, we could theoretically get a quarter basis point rate hike. It's not going to do a tremendous amount of damage like people think it will do, okay? The Federal Reserve raised interest rates from 2022 up until 2023 December, when they basically said, hey, we're done done raising rates. They raised rates like you're talking multiple percentage points, okay? Doing a quarter basis point hike, it's laughable. But if you are a new investor, you may think it's the end of the world, and that's why you have to do your due diligence around this stuff. My prediction is that Kevin Walsh is going to come out, and he's very much going to squash rate hikes, and we're just going to be on a epic rally, maybe into midterms or after. I could be wrong about this, but if I am wrong about this, I honestly really don't give a rat's ass, because I got my positions built. I'm not gambling in the short term. You can make the argument that taking a long position is long-term gambling. I can go ahead and like debate that topic. I've actually heard that before, that if you take a long position, you are theoretically just a long-term gambler. I mean, hey, that's not a false statement to really say. I'm buying shares for the future, so therefore I'm kind of gambling on the future if you really think about it. But short-term options, short-term trades, I'm not there. I'm doing a public profile challenge on this YouTube channel, which means I made this profile just for this YouTube channel. Doing a 6-figure account challenge. The account challenge started 2 January, so you're talking 6 months ago now. And this account is up by 50% now. I have taken some losses. I've taken some wins. But overall, my wins outweigh the losses. I took a $2,000 loss 2 weeks ago on friggin' Adobe. Sold Adobe at $195, and Adobe right now is $218, baby. I don't give a shit, because I took that money and I rolled it into Palantir when Palantir was actually very much lower. I picked up some more ServiceNow. I opened a Coinbase position, and I also bought cryptocurrency for the first time since 2021. So I'm very excited to actually be holding cryptocurrency right now. Ethereum is where I chose to buy. If cryptocurrency is going to go on a downward cycle into December, I could very well buy another Ethereum coin. But I mean, overall, I mean, this profile has just, it's going to be showing a tremendous amount of more growth, and AMD is definitely going to be getting back to all-time high, past all-time high. AMD is going to be $600 by the time you know it. SoFi getting a reevaluation rating on here. Robinhood, very much seeing a lot of massive gains. Palantir is going to get back there, especially when the market wants to take more risk on. Meta, I've really deleveraged myself. I've sold actually half of my Meta position several months ago. I ended up actually buying more SoFi, more Hood. I think I bought some AMD shares back in February. I had a bigger Meta position, but then they came out with CapEx, and they're spending just way too much. I'd rather have money in companies that are receiving the CapEx rather than doing the CapEx in general. Meta, Google, Amazon, Microsoft, the 4 biggest companies spending so much billions. They're phenomenal companies. I mean, they're magnificent companies. They're called magnificent companies for a reason. They're not bad. They're just spending a tremendous amount of money, and I'd rather be oopsies, my cell phone just kind of I did some hanky-panky things, kind of fell. I'd rather be in companies that are receiving the money, like you said. ServiceNow is a cash king. Actually, they're growing year over year faster than Adobe. And I mean, Adobe just had a lot of internal noise. The CFO is leaving randomly. The CEO already stated he was leaving. I just kind of really don't want to be a part of a company with a management team change. PayPal, I kind of really want to hold on to a little bit longer, but I could very well be cutting that loss very soon. And then Coinbase, new position for me. Obviously, I do believe the crypto cycle is going to end this year. 3 years up, 1 year down. That's crypto cycle. Cryptocurrency goes up 3 years, down 1 year, and then we're going to rally back up. So once the crypto cycle is done, we're definitely going to be seeing Coinbase very much exploding. Now, not PayPal. Oh, please forgive me. SoFi. If you're a SoFi bro, SoFi sister, SoFi shareholder, let me know down below. SoFi, out of all the companies I'm in, it is a 10-year hold for me, unless the management team changes course for the worse. Now, why do I say 10 years? It's because Anthony Noto, the CEO, has outlined a 10-year vision. There's really no nice way for me to say this. I just turned 38. I'm a millennial. People are not getting any younger, and the older generations are dying off. The newer generations, they don't know what it means by balancing a checkbook, okay? I myself have never theoretically balanced a checkbook. I've always used online banking, but for anyone out there that, remembers their parents, grandparents, oh, I got to balance my checkbook, it's like you can just log on and check your balance in real time. Balancing your checkbook means that you literally keep a written down list and you do the math. Well, that's obsolete because everything is online in real time. And SoFi offers pretty much a just nuance of banking, and the way their business model is set up, because half of their revenue is lending and half of their revenue is tech-based, service-based revenue. They're not a traditional bank. So over the next 10 years, as more and more of the Gen Alpha moves in to definitely opening up a checking account, savings account, Gen Z gets a mortgage, loans, SoFi is going to be there as the fun bank to go to. Now, can these legacy banks kind of spoof things up a little bit? I mean, sure, they could. It's going to take a long time for them to do what SoFi has done. So that's why I'm very bullish long term on SoFi. Now, regarding SoFi, what's happening today, like I said, very good momentum. We're staying above $18.50. I talked about this in yesterday's video or the day before. Basically, I'm on the daily chart right now. Each one of these candlesticks represents one day. I'm using the Keltner channel right now, which is a little different than the 50, 100, and 200-day moving average. The Keltner channel averages are based on momentum. So SoFi is very much on a upward trajectory right now, and it has quite a bit of room to move. We're definitely not overbought on the daily chart. We can even go to the weekly chart. We are not even nowhere close to being overbought. You're talking $22 is where we really could get into overbought territory. So SoFi has a lot of room to rally and to move higher. Very bullish. Now, something I do want to say about SoFi, Cathie Wood, she is okay. So Cathie, let me go ahead and say this. I am a long-term investor and I'm also a trader. I have my trade positions. My trade positions are very much more private. I have my private profile that I don't show on this YouTube channel. I have shown my SoFi shares on my private account. I'm holding 1,642 shares on my private account. I started buying SoFi February of 2024. On this account, what you see here, a lot of these SoFi shares were bought during Liberation Day last year, and then I bought a lot this year when SoFi broke $25. Now, this account is very much set up for long-term investing, greater than 12 months. I mean, SoFi, it's greater than 12 friggin' months. But I got my super long positions, aka SoFi. AMD, I'm looking potentially 2 to 3 years, but that could be cut very short. Because if AMD prices in so much stuff, then hey, I'm gonna be a shorter investor. I'm gonna take a lot of profits. Doesn't mean I sell entirely out of my AMD stock, but I take a lot of profits, a tremendous amount. I want to say really my Ethereum could very well be on maybe potential shorter side. If Ethereum goes back to something crazy, like back to all-time highs within the next maybe 9 months, maybe I go ahead and it's going to be hard, man, because if Ethereum goes back to all-time highs, I make 190, 200%-ish. I could very well walk away, or maybe I hold on to crypto a little longer. So there are positions on here where it is very, it's kind of short-term investing in a way. Not necessarily swing trading. I want to say swing trading is primarily less than 6 months. But just very, it's very reactionary. Let me just say that. I could very much be looking. I mean, if something happens to crypto where it just boom goes on a gigantic rally, maybe I see other discounts that I want to take advantage for. Cathie Wood is very interesting. Cathie Wood, she has ARK Invest. She's very well known for Tesla. She ended up making a killing off of Tesla. She got into Tesla super early, but the thing about Cathie Wood is that she does a lot of trades. And I've been following Cathie Wood for a while. I started really like following her back in 2023. And I ended up taking some of her positions that she did like post publicly. But she does some very weird stuff where she'll go ahead and get into SoFi, then she'll sell some of SoFi. And a lot of people like myself who are retail are just wondering, hey, what are you doing? Maybe, and this is the thing too. If you are a big investor like Cathie Wood, right? You have access to more premium features than a little fish like me. You could very well maybe say, okay, we're only going to sell some of these shares. Some brokers actually do offer that. Robinhood is where my private account is. I would theoretically have to call Robinhood to, so keep it simple. Let's say SoFi is at $10, you buy SoFi for $10, and then SoFi goes to $15, you buy SoFi at 15, and then SoFi goes to $20, you buy more shares. But now you want to sell your SoFi shares that you bought at $10 for 100% profit. Well, you got to call Robinhood and say, hey, sell those shares. On Webull, I don't think it gives me the option. On E-Trade, on Charles Schwab, I think you can. But Cathie Wood, like a lot of times, she'll be in, she'll be out, she'll be in. So, I mean, is this positive that Cathie Wood boosted her stake by 1 million? Sure. I mean, it's definitely not negative. I mean, we got Anthony Noto buying the stock. We got Cathie Wood. But just understand that Cathie Wood, she does a lot of trading. So hypothetically, if SoFi goes back to all-time highs in the next 6 months, don't be surprised if we see Cathie Wood selling her position because SoFi is at 32, 33 bucks, okay? Just understand that. So if you are like me, just do your research and don't let, just because someone big sells out or buys in, you got to stick to your own strategy. You got to stick to your own guns. I will say this, though. All the times that Anthony Noto has bought into SoFi, I have bought in with him, okay? Because he's the leader of our company. Cathie Wood is not the friggin' leader of the SoFi, SoFi company. She's not the leader of the SoFi movement. To be honest, I really think Anthony Noto is the leader of the SoFi movement as well, too. So therefore, what she does, I really don't take too seriously. And like I said, I wouldn't be surprised if she sells SoFi in the next 6-9 months. I'm not going to be selling SoFi in the next 6-9 months unless something terrible happens that the management team does. But I've been following this management team now for 2+ years. Yeah, I don't see it. I see a win-win chicken dinner around SoFi. All right, I'm going to wrap up today's episode with this. Stay motivated. Tomorrow is Tuesday. Do we have any more government data? I just want to double check. Otherwise, please do your due diligence. Like you said, there is no government data scheduled for tomorrow. Yes. Ooh, hang on. So the following week, next week, that's when we're going to be getting that's when a lot of these inflation reports are going to be dropping. So stay tuned. We got pretty much momentum this week. Next week is going to be crazy. Oh, it's going to be crazy for sure. All right, later everyone. Take it easy.